Waiting for investment returns can feel like watching paint dry. You've done your research, picked your stocks, put your money in, and then you wait. And wait, and wait some more. It's frustrating, right? Especially when dividends only pay out quarterly, leaving you with long gaps where nothing seems to happen. But here's the thing, it doesn't have to be that way. What if I told you there's a way to structure your portfolio so that you're getting paid every single week throughout the year? Weekly payouts like clockwork. In this video, I'm going to show you how to use 12 carefully selected high-yield dividend stocks to create a steady, reliable stream of income that you can count on every single week. I will explain why each stock is a solid pick and how they fit together to create reliable weekly cash flow. In the end, I will show you how this portfolio and strategy can pay on average $300 to $400 from the first week. Alright, so before we jump into the exact stocks, let's quickly break down what dividend stocks actually are. Because I know that financial jargon can sometimes feel like a different language. At its core, a dividend stock is basically a stock that pays you a portion of the company's profits regularly. It's the company's way of saying, thanks for sticking with us. Most companies pay dividends quarterly, which means you get paid every 3 months. But here's the thing, we're not here to wait 3 months for cash flow. I personally prefer getting paid every week. So with some careful planning and the right selection of stocks, you can structure a portfolio to receive dividends every week. That means instead of sitting around and waiting for those quarterly payments, you're getting that sweet weekly cash flow that keeps your finances moving smoothly. Now that we're on the same page about how dividend stocks work, let's get into the fun part. How you can actually structure your portfolio to get paid every week. This is where the strategy comes in. So instead of relying on 1 or 2 stocks that pay you every 3 months, I'm going to pick 12 dividend-paying stocks, each with a different payout schedule. That way I'm spreading out payments to make sure I'm seeing cash flow every week, not just every quarter. Here's how it works. Each of the stocks I'll show you has a different payout date. Some pay at the beginning of the month, others pay mid-month, and some near the end. By staggering these payout dates, you can ensure that there's always something hitting your account, week in and week out. Think of it like putting together a puzzle. Each stock is a piece that fits perfectly into the overall picture of creating consistent cash flow. But I'm not just grabbing any old dividend stock, I'm focusing on a few key things. High dividend yields, financial stability, and diversification across different industries. This helps protect my income if one sector has a rough patch. For example, I will include stocks from industries like real estate, energy, and finance. So if one industry takes a hit, your other stocks can keep the cash flowing. This sounds like a lot of work, but no worries. I've done the heavy lifting for you. I've already handpicked 12 stocks that fit this exact strategy. Each one has a high yield, pays at different times, and comes from a variety of sectors to keep things balanced. Now, for the part you've been waiting for, the 12 stocks that will make your weekly cash flow dream a reality. In January, April, July, and October, I start my first week cash flow strategy with ETRACS. Quarterly pay 1.5x leveraged Wells Fargo BDC Index ETN, or BDCX, which offers a solid 16.08% dividend yield. It is an exchange-traded note, or ETN, that tracks the Wells Fargo Business Development Company Index. These BDCs provide crucial financing to small businesses, giving them access to capital that they wouldn't normally get through traditional lenders. Next, for the second week, I have ETRACS quarterly pay 1.5x leveraged Alerian MLP Index ETN, or MLPR, in my portfolio, which provides a 9.94% dividend yield. It focuses on master limited partnerships, or MLPs, in the energy sector, combining the tax benefits of a partnership with the liquidity of a public company. Also paying in those months' third week is Putnam BDC Income ETF, or PBDC, which comes in with a 9.84% dividend yield. Similar to BDCX, it focuses on business development companies but without the leverage, making it a bit less volatile. For the fourth week of these months, I have something a little more reliable and stable, Enos Inc., or EBF, which delivers a 15.91% dividend yield. Enos operates in the business forms and supplies industry, producing essential items like checks, labels, and forms, things that many companies still rely on. While it may not be the flashiest stock, its consistent performance is exactly why I need it to maintain reliable cash flow. Now for the months of February, May, August, and November, I count on Arbor Realty Trust, Inc., or ABR, which provides a 11.43% dividend yield. It is a real estate company trust, or REIT, that focuses on commercial real estate loans and mortgage-backed securities. As a REIT, it's required by law to pay out at least 90% of its taxable income to shareholders, which is why ABR offers such a nice yield. It's a stabilizer in my portfolio, especially during times of market volatility, and it pays dividends consistently. Also supporting my income in the second week of those months is 6th Street Specialty Lending Inc., or TSLX, with a 11.56% dividend yield. It is a business development company that focuses on specialty lending, offering tailored loans to businesses that may not have access to traditional financing. It's a solid performer. Another solid performer during these months is Delek Logistics Partners, LP, or DKL. With a 11.08% dividend yield, Delek operates in the midstream oil and gas sector, handling pipelines, storage, and transportation of energy products. While the energy sector can be sensitive to external factors like oil prices, Delek's focus on infrastructure tends to be more stable. To complement these, I also hold DHT Holdings Inc., or DHT, which provides a 9.22% dividend yield and pays dividends in the fourth week of February, May, August, and November. DHT operates in the oil tanker industry, and its consistent dividend payments help cover any volatility from any other parts of the market. DHT is a dependable stock that ensures steady payouts during these months. As for the months of March, June, September, and December, Simplify Propel Opportunities ETF, or SURE, takes the stage with a 14.01% dividend yield. SURI focuses on specialty situations and market inefficiencies, making it a dynamic and flexible player in my portfolio. It's one of my go-to stocks for income in the first week of those months. Alongside SURI, I have Fidus Investment, or FDUS, offering a 12.56% dividend yield. FDUS is another business development company, this time focusing on providing capital to lower middle market companies that are too small to get large bank loans. FDUS has a strong track record of reliable dividend payments, and I can count on it to deliver in the second week of those months. For an even bigger boost during these months, I have BWLPG Limited, or BWLP, which has a massive 21.33% dividend yield. BWLP operates in the liquefied petroleum gas, or LPG, shipping industry, and while its massive yield is certainly attractive, it comes with some volatility. BWLP is a high-risk, high-reward stock, but when it pays out in March, June, September, and December, it significantly boosts my portfolio's performance. I keep an eye on it to balance its higher risks with the more stable stocks in my portfolio. Finally, for the fourth week of those months, I have Frontline PLC, or FRO, which provides a 10.22% dividend yield. Like DHT, FRO is in the oil tanker industry, and together, these two stocks ensure that my portfolio is well covered, even when other sectors might be experiencing more volatility. Their consistent dividend payouts offer a solid foundation of returns, rounding out my strategy and ensuring that my cash flow remains steady all year long. In the end, I will explain how this portfolio and strategy are capable of paying out an average of $300 to $400 right from the beginning. All in all, which stocks will pay you in which month? For this portfolio, it should actually look something like Exhibit 1. Since we know what each stock pays in dividends, it should look something like Exhibit 2. Now that we've gone over the specific stocks for building a weekly cash flow strategy, let's focus on how to actually implement the plan. Creating a dividend portfolio that delivers consistent income takes careful planning and regular oversight to ensure it stays aligned with your financial objectives. The first step is deciding how much capital you're willing to commit. The size of your initial investment will directly influence the level of dividend income you generate. To make this strategy effective, you'll need about $120,000 for the portfolio. With 12 stocks in total, you'd allocate $10,000 to each one. Distributing your funds evenly across all stocks minimizes the risk of one stock dominating your portfolio, providing balance and stability. Once your capital is set, the next step is purchasing shares of each stock. Timing your purchases is crucial, and it's best to buy just before the stock's ex-dividend date. This date marks the deadline for qualifying for the upcoming dividend payout. By purchasing before the ex-dividend date, you'll be eligible for the next dividend distribution. Now, the big question on everyone's mind is, what are the expected returns and average weekly income? So what kind of cash flow can you expect from this strategy? Well, the beauty of this portfolio is that once you've got it set up, you'll be receiving dividends every single week. No more waiting for those quarterly payments. If you've invested around $120,000 split evenly across these 12 high-paying stocks, you can expect an average of $300 per week in dividend income. That's roughly $1,200 per month from the very first month of investing. Let's break it down a bit more. Since these stocks have staggered payout schedules, you'll see income coming in from different stocks each week. For example, in January, you'll receive dividends from BDCX, MLPR, PBDC, and EBF, totaling around $1,294.25. February brings dividends from TSLX, ABR, DKL, and DHT, giving you about $1,082.25. Some months, like March and June, will bring even more, close to $1,453 because of the higher yield stocks like BWLP and FDUS paying out. This pattern continues seamlessly through March, April, and beyond, up to December, creating a consistent cycle of monthly cash flows. Each quarter, these dividends will repeat, ensuring a steady income stream averaging around $300 to $400 a week. The best part about this strategy, unlike typical dividend investments where you might be waiting months or even a full year for payouts, this approach gets you earning from the very first week. You'll receive dividend income regularly, with 4 payments arriving each month. If you're wondering what the actual cash flow will look like, check out Exhibit 4. It provides a clear breakdown of your monthly returns, illustrating how your investment generates a steady and predictable flow of income throughout the year. Want more in dividends? Click the video on the screen to find out how to turn $100,000 into a portfolio valuation of $17 million that pays over $100,000 in dividends.